Boom. We are alive, ladies and gentlemen. Thank you all for joining us today. This is Tia with the Arcane Bear. Was I wrong? It's always a fun question to ask ourselves. And yeah, you could pretend that I was wrong. I think too often people get focused on the price and ignore the thesis. If you really listen closely, or I guess just actually listen at all, one of the things I've talked about is that anything below a market cycle high is a time to accumulate. I've said that pretty much every video. One of the reasons why we look for price targets is to set limit orders. That way, if something fun and unique happens, like a quick dip down to $23,000, we get to take advantage of that. Not so much, oh my God, I'm gonna exit all my positions so I can be in there and get in here and get out there. No, no, no. We've never once advocated for doing stupid, silly things like jumping in and out of positions. Now, I do like to trade every now and then at the very beginning of the market cycle, not in the middle part here, and there's a few reasons for that. I wanna go over something I thought today was kind of a fun highlight of this mentality too. If you've been following us for quite some time, boom. So this is a video I made back on March 3rd, 2017, saying Bitcoin could go to $6 million. Now, if you'd like to be smart enough to look back, take the time, or I'll save you that time. Bitcoin was around $1,000 at that moment. It's quite early on in this. And I still stand by this sentiment. Bitcoin could go to $6 million. Well, hey, look, if I haven't changed my long-term outlook, the day-to-day steps on how we get there are maybe a little bit irrelevant. And I think often what we do is people get way too caught up in the day-to-day steps. I had a bunch of people like, oh, see, are you going to admit that you were wrong? It's like, dude, actually, if you listen, first off, we said if we get above the 33.7 mark, we're going to rip to 40 really fast. And we did. Technical analysis is not about only this will happen because of this as a setup. It's, well, no, these are the possibilities, these are the probabilities. And as soon as we moved above that falling, or this, I guess, this downward support line here, this white one that we had drawn in for months, we moved up quite quickly. And this is the thing, there is no getting it right necessarily. All this potential downside would have done was allow us to set limit buys at these areas so that if we were lucky enough to get a price advantage going that low, we would. I really don't think people understand that the long-term thesis is built off the idea that Bitcoin is going to $6 million. I've been standing by that sentiment since 2017. Now, I was a crazy man with long hair living in the jungle to say that back in 2017, but there's a reason why I like these longer-term moments in our thesis is because when we start to zoom out, let's go back to the daily on the Bitcoin chart here, and we go, were we wrong? Well, no, we weren't. If you look back, all the prime entries for this bull market, we were saying should have been taken here. No matter what Bitcoin's price is going to do here, whether it was going to come down a little bit lower or jump up a little bit higher, it basically made no difference to our early entries. And not only that, if you extend that thesis all the way back here to when we started talking about this video, and the only sentiment that I've been recommending for the last year at the very least is that anything below a cycle high, back here in 2017, we can use, for example, anything below a cycle high, because I made this mistake. I bought Bitcoin at the all-time high of $1,000. Now, what did I do to correct that mistake? I started studying, and I started to accumulate more of the asset itself. And as I did that, what I ended up getting was a rounded out price without thinking. And this is what I think most people should do. Said that every video so far. You should basically be focusing on just accumulating on a month-over-month basis on whatever day of the month you can afford the extra revenue and ignore the price, because over time what you end up with is a rounded price through the cycle of accumulation that takes place. Now, what does that mean? That means in my mind there is no such thing as a bear market. A bear market is really only an accumulation market, and it's one of the kind of funny emblematic ideas about the bear that I don't think a lot of people understand. A bear market is the perfect time to be buying up whatever you can and putting it away in the forage. We've gone over this on many different assets. Anytime that there was a downward price swing, and this is the sentiment of like, oh, well, buy the dip. Well, yeah, technically, and then as a matter of fact, don't even just ignore the dip. And anytime you hit the 19th of your particular month, just buy. And what you do is getting this beautiful, well-rounded strategy. Now, a lot of people think, oh, I'm going to get in here, I'm going to exit up here, and I'm going to rebuy back in here. And then they do none of those things and fail miserably, when what all you could have been doing and focusing on for a strategy, which is what we've recommended, is just buy on a month-over-month basis and ignore the price. So that way, when we get into these areas of annoyance, as I've said, I don't like these intermediary trading ranges for many reasons, but number one, they're significantly less reliable than these long-term trading ranges we took to get into position heavily. I still think that overall, fundamentally, this video we made back in 2017 is still part of our thesis. Bitcoin has the chance of going to millions of dollars per Bitcoin because the US dollar is fundamentally worthless, right? That means that one of the things that we measure the value in this world that we live in today is fundamentally worthless. What does that mean for our digital asset layer? Well, it could go a lot higher. Shit, Bitcoin could go to tens of millions of dollars because the US dollar fundamentally has no value other than the paper that it's printed on, which is about what you would cost to like wipe your butt with. So knowing that, knowing where we are today, where we've come from 2017, well, technically earlier, but 2017 is a great mark because that's when we started making all these videos. So that you go back and look at all of that. It's there as recorded history. But the sentiment stays the same. If you're accumulating on a month-over-month basis, anything below a cycle threshold high ends up becoming an area of accumulation. And as a matter of fact, there's so many of you that would have loved to have known that look, between 2018 and 2019, it's not a bear market. It is a time to be accumulating the assets that you are interested in. And that's it. It's not, oh my God, could Bitcoin's price go any lower? Look, CTO, you were wrong. It didn't go to 1,500 bucks. It only went to 3,000. It doesn't matter how low it goes. It's that in that cycle low, you keep accumulating. It makes it so simple. I don't know why people want to make this game more complicated than it has to be. One of the reasons why I'm such a big fan of my current thesis, because it took a few years to get to this beautifully refined spot, is that the idea behind Wu Wei is how do I get the most for the least amount of effort? And that's what this thesis represents. So for those of you that were writing, oh, well, you were wrong. Well, not really. Yes, it didn't go down. I'm actually a little bummed about that because there were limit orders set there. And even if it does go back down that low, great, there are limit orders set there. Look, one of the things people get way too caught up in is in the markets being right or wrong on a very short-term basis. I'm interested in the long-term game here. I've been here for a long time already. I'm not going to change that just because there are some freshies and rookies out in the crowd there. So did I get it wrong? I don't think so. If you listen closely, the thesis has remained exactly the same. Buy on a month-over-month basis and basically ignore the prices. And when you see long-term accumulation cycles like the one we just went through for 1,200 days, approximately staying below the $20,000 mark, you accumulate. Even more clearly defined on Ethereum was actually that same accumulation cycle with a much lower trading range, right? So here's the cycle threshold high of around $1,300. But if you go down at the bottom, for those of you who like studying the Wyckoff trading ranges, this was the area that we were predominantly interested in. And this is an area of 800 days, 680 approximately, that gave you like the best time to get into Ethereum with around a 200% up and down cycle, right? But all the way back down to 80 at the peak of the pandemic here before we continued up. Now, whether Ethereum jumps from up here or not is basically irrelevant to me, and it should be irrelevant to you. The things that should be most important to you are understanding these cycle threshold highs, which was back at 1,300, and the cycle threshold low, which was down around $150 Ethereum. Had you executed that same thesis between 2018 and 2020, you would be doing amazingly well, and any little bump and jump in between here is irrelevant. So for those of you that wrote that, what I can tell is definitely that you're new to this ecosystem, and that you think this small move here of like, what is it? It's only small in the crypto sector, around 25%, is something to really toss your hat up in the air about. If you've been following and you've been doing your homework, these Wyckoff trading ranges, the ones that are the most reliable, provide the most amount of return, and allow you to enter the market for an 800-day cycle, produce extraordinary gains and involve very little risk. Up here, just starting your cycle thesis threshold idea up here, it will appear risky for the first couple of months. A, we could go back down lower, and B, we could just be in the intermediary market cycle, like I've suggested, that this is going to be maybe only a 200-day area of accumulation. Now, there's a lot of room for downside, right? And that's the key fundamental about this particular part of the market cycle, is that when we're up this high, we have a long way down to go back to where we started from. Right, our initial breakout areas were between 13 and 20,000. This whole gap here, effectively, there's not a whole lot holding us up Intel back down there. It's very likely we could come back down this low. Now, do I think it's going to happen? Not necessarily today. I've mentioned that. I thought that this regression line would actually hold up quite well. It's based off the other regression lines, but even if we did see a dip to $23,000 and touch these other regression lines, I'd mentioned it was going to be a very short-lived dip, that the extension of this cycle itself would probably only be like 200 to 300 days. So I think more importantly, what I want to get across is that when you understand the basis of the thesis, you are never wrong. Because fundamentally, let's use another example. Let's use Serum, for instance. Serum is near the bottom of its accumulation range here. It could go a bit lower, to $1.80 to touch what I believe is now another falling wedge type scenario. We saw our beautiful breakout from our Livermore path. We saw upwards of a 9. We've retraced all the way back down to the bottom of that. So let's just use this and carry this thesis forward starting from today without any retrospection on Serum whatsoever. So let's say, hey, I'm new to venture capital. I'm new to this type of thesis thinking. So what Tio is basically saying to me is that if I buy, let's just use a small, insignificant number here. So anybody watching, whether you're 16 years old and working at McDonald's, or you've got hundreds of thousands of dollars on a day-over-day basis you can spend on liquid interest, then okay, let's go $100 a day or $100 a month, and you just keep accumulating. What you end up doing is getting a really, really nice price point throughout the period. So right, for part of your thesis, okay, you got it wrong, but look, I think Serum is a great idea, so I'm going to continue to accumulate. And what we end up doing is getting this really, really nice rounded price over the course of 3 months. Now let's say Serum goes up to $24 and then comes back down to $7, right? Oh, well then great, you keep accumulating effectively if you believe it's a good idea. Now, over time, this has really paid off because the only downside you should be interested in is, have I hit a target with Serum that's too much? Let's say I've got $200,000 in Serum by the time it's like done this process. I've accumulated 200 grand worth of Serum and it's down 50%. And I go, oh no, I've lost $100,000. Are you okay with that? That's the most important question, because often if you're patient, that view of a loss can be A, rounded out through time through more consistent buys, and then B, if you were right, if you were correct in your thesis of what you thought you should be buying, you have an extraordinary amount of room for upside, and it's usually not that far away. Bitcoin has been wonderful because every market threshold high and then reaccumulation cycle we've gone into has performed into all new highs, right? And Ethereum has now done that too. Cardano has now done that too over the course of a few-year period. We can tell that the DeFi sector and the crypto world is going to absolutely explode over the next decade because it is more productive than the financial system we have today. So overall, I go back to this and I go, look, Bitcoin could go to $6 million. Said that in March 2017, and I stand by that. I think that the loss of the United States dollar as a reserve currency and the lack of trust that should go into all governments at this point is going to drive the trust of digital currency and digital money to a much, much higher degree. And it's going to be a tumultuous time to be a part of. Now, what year does that happen? Irrelevant to me. I believe it is going to happen. I believe the inevitable demise of the US dollar will happen. When? I don't want to place a bet because that sounds like predicting, and then I can be wrong. I'm not going to predict a date. I'm just going to predict that it can get there. So if it goes down to $20,000 and then back up to 40, I don't give a shit at all. The thesis remains the same. Accumulate anything below the cycle threshold high on a month-over-month basis, and you will do well. Anyways, I wanted to clarify that because for some reason it didn't come through clearly to other people. So if you don't get it after this one, this has nothing to do with me. We try our best to help educate and inform, make people understand how a long-term thesis works, why it's worked for me, and why I think it will work for you. Anyways, Tea with the Arcane Bear. I'm going to answer a few of your guys' thoughts and questions today. I'm going to jump in and look at the chat. Nice, gaslighting people when you're wrong. I like that. I love how ignorant people are about understanding like situations. It's hilarious. If you listen to the thesis, there's no such thing as being wrong, by the way. It's a tails I only lose a little. That's the actual, that's the function of that sentiment. God, you guys should do your homework. Yes, if the more you do your homework, the better off you'll be. I think that's a valuable function. Whether it goes up or down, Ooh, KP Monty has a good question here. It says, my current Bitcoin cost basis is $3,000. Does it make sense to dollar cost average of my cost? I think that any asset acquisition plan should be a multi-year process, and you should be focused on acquisition and accumulation every year. That's what I think. How you do that, how you deliver that thesis, the amount that goes into that is really up to your current budget. I constantly try to get people to focus on budgeting out of month over month, have a plan of some kind of what you can spend. And then, yes, I do believe that averaging any accumulation cycle is a smart way to go for any asset that you're interested in. Oh yes, and Alex says I never tell people to short. Yeah, I don't. First off, I don't think playing with leverage potentials for anyone is generally a smart idea. I don't even think you should sell. Like I should think you should just accumulate. The only selling proposition I have is, can I function my business for the next 3 to 5 years? And that's a thesis that comes from my entrepreneur's days. It has nothing to do with my portfolio days. That thesis came before I ever started buying assets. The thesis is, holy crap, I could make a lot of money and then sometimes have to go 2 to 3 years without a lot of money. So I should budget in what 2 to 3 years costs. I started doing that as an entrepreneur because I would have great ideas. I'd perform. We'd be doing so much money every month. And then for 2 to 3 years, I'd have to revise my business plan and kind of start all over again. So that one comes from a much older day of building. Agre says, capital preservation is the most important thing in the bear market. We are going down to low teens. Have you got capital to buy? Here again is the important part, is that you don't necessarily even want to look at your portfolio for growing your portfolio. If you look at every term backwards and you repeat the process, it functions without thought, right? So I see a question. One of you says, Gareth says, I totally get your thesis, just wondering at this stage if the bull run would make sense to accumulate USDC and earn yield until the next bear market, then dollar cost package, everyone was dipping. See, this is too much thinking about getting the price target right with no increased exposure to the asset that I'm interested in, right? Having a long thesis that doesn't include acquiring the assets leaves me with no exposure to the asset. Right, so I don't think that thinking so much does a great job. What you want to do is just be consistent about that strategy. Like I can't express that enough. Like, you know, when we go back and we look at all these accumulation ranges. Actually, I wish I had the other log chart up we had drawn. Because it's another great way to look at it. Actually, I think I've got it in the private bear den. We can just hop over here. We can go into trade setups. We can scroll back. Yes, here it is. Okay, so this is a long-term accumulation cycle threshold movement of Bitcoin since 2011. And this is where I get the idea of, hey, look, anything below the cycle threshold high as it comes down is an area of accumulation. And had you done that every cycle prior to this, you'd be in the positive, okay? Well, great. That's great, Tio. Bitcoin could fail. Yeah, well, then it's going to zero and we all look stupid. And that's highly unlikely at this point. We've made it a long ways. Back when I was saying that in 2017, that Bitcoin could go to $6 million. Yeah, maybe I was a crazy person, right? Maybe then when it was $1,000, I was saying could go to millions. Maybe that was a crazy, like far outlandish thing. But now as we get further and further into the future, it actually becomes more and more likely that that's true. So technically, waiting for it to come down to observe the best price inside of the market cycle is a no-go, because this could very well likely be a 200 to 400 day cycle, much like we said before. We're back at around $120,000. So whether it dips to 20 and then jumps back up to 40 or jumps from 40 to 60 is irrelevant to me. I'm following the month-over-month strategy, which is accumulate. When we see market cycle lows, like very obvious cycle lows within the accumulation, within the trading range, yes, I will double down. I will throw the kitchen sink at it. And we did that last year back here at around $300. It did phenomenally well for us. It did really well for a lot of private bear members. A lot of the private group made hundreds of thousands of dollars. Some of you I know personally made millions of dollars between this point and this point. Right? So where we are now is in the middle of the market. It's nowhere near as reliable. It's nowhere near as valuable. And if you're new here, you should just be focusing on that consistently executed investor strategy and basically ignoring the price. And the reason we show up and look at the price every day is because it offers a valuable opportunity to learn something. Hey, look, what we ended up getting was the breakup of the falling wedge, and then it became bullish very quickly. It was not only down as the option. It was, hey, no, we actually have an option for a bullish opportunity here if we break above this. I said this multiple times, and as soon as we did, it went straight up. Well, dingo. Hey, technically we got it right too. It just, the chart Glasswalker was sharing just looked so beautiful to come down to this $23,000 range. And we get hopeful. We're like, great, another area to accumulate the asset that we want on the long term at a cheaper price. Anyways, I hope that's valuable for you guys. I know some of you really find it valuable, so I appreciate your guys' support. For those of you that do the extra homework, you do the study, you do the research, you come to your own properly educated conclusion. Let's see here. Take a few more look at your guys' thoughts and questions. Okay, let's see. Daniel J says, do you agree with the dollar milkshake theory that other fiats will lose more value than the US dollar? Well, yes, I believe that they are all that are raced to the bottom, effectively speaking. If you go, and I live in Costa Rica, our inflation rate here has increased by 30% since I first moved here. That means the US dollar buys 30% more here in Costa Rica than it used to. But you know what they do? They just raise the prices to try to keep up with the US dollar. It's not a great thing, but that's definitely what we see happening. So yes, all the fiat currencies are worthless, and the US dollar will be one of the last one to be deemed worthless, effectively. So I do agree with that thesis to some degree. I don't know what the end point of their thesis is. Does it get old preaching a message of patience and people getting mad at you day to day? Sometimes, yeah. I wish that the message came through clearer, so I'm trying to learn how to do that better. You know, guys, I'm here. I'm interested in venture capital. I like the asymmetric movements of these markets. We consistently look at that function over time, and we try to educate people through the processes of the things that I got wrong, which is thinking, oh, I'm going to buy here and sell here and then buy here and sell here. Yes, I do some selling, and I definitely do some really focused buying when we're down near scare moments. Like, scare moments are now one of my favorite things. Like, the next time we go to pandemics, like Tio's throwing serious weight at the markets, because it works. And we saw that conversation come to play in August very, very clearly. We actually even had conversations around, what can we do to move 10 or $50 million into the market? And it's just alone, first off, the railways and the systems and the infrastructure to capitalize on that stuff properly is kind of probably one of the most annoying aspects. Anyways, we'll go over a few more of those ideas in podcasts as we turn out some ideas on asset management later. What are your thoughts on Ethereum upgrade next week? Again, I think a lot of this stuff is noise. I look and primarily focus on long-term investments. So that Ethereum upgrade, who knows? Again, we're still right in the middle of a market cycle. We're not at the best place of entry, and we're not at the best place for exit. So I'm not as excited as I was back in August about where we are in the markets, because the reliability of the up and the down is almost equal. Like, the risk to reward here is not as amazing as it was when this first started, right? So there's still a high potential of risk to reward if you start today. If you just start today and keep going and you carry that thesis through time, well, then the risk to reward relationship increases, or the reward to risk relationship increases. You have a greater chance of getting higher rewards because you're going and extending that thesis through time. If you have a very short-term thesis, your risk relationship just increases almost exponentially. Rolando says, buy every month between the 11th and the 25th. Simple. Yeah, this is effectively the thesis that I think is the most functional. Any reason why that time frame? Those are the best numbers in the numerical month. It's easy to dollar cost and hard to take profits. The profits that I look for are operating capital for my business. So I hope that each one of you are on your own pathway to discovering what it is you like to do for a living, because I believe the workforce, or you working on a day-over-day basis, is kind of how we repay our karmic debt for the community and giving this opportunity to be alive and be here. So for me, I think that your job or your work, or your what do you call it? What you're called to do, how you help your community through your service. I think that's a very important thing, and you should spend most of your time focused on that. So in terms of my portfolio, when it's at super highs and I go, well, great, look, I can just shave this off the top. In the next 3 to 5 years of business, I could be a total failure. I could sit, and hold this, doesn't sound like a failure moment. I could do nothing but meditate for the next 5 years, and I don't need to work. Like, that's my favorite. Whatever I can do to get me to the point where I can just sit and meditate, that's like basically the goal plan. And we're at a point where hopefully we can go walking through Patagonia. There's a few things I would like to do that involve not working, not sharing the thesis, and it's just living and meditating mostly. So I like to get to that point every time. Evru says, I love your thesis and method of regular accumulation. It's been great for me. I have been miserable, right, rolling over a 401k into Bitcoin and have to make the initial purchase all at once. Yeah, I don't know too much about the American 401k laws. I do know there are ways to hold Bitcoin in your IRA, etc. I'm not the person to give advice on that, although there are people that can help. I think it was called Keep Your Keys IRA. I'm sorry, you're gonna have to do your own homework on that one. I'm not sure. I don't need to fall down that angle because as a non-resident, not U.S. citizen, my tax bracket is significantly different. Rotten Gone says, you and Tone have something in common: conservative approach, different ideologies, but practice and following rules. Yeah, I can't stress enough that the consistency of an accumulation strategy is really your best bet to success. It's what's worked for me with little to no effort. And that's really my focus is result and effort. Here, little effort, huge result. That's my guiding light thesis. Christian Larson says, do you see a future where crypto would be less affected by other financial markets? Kristen, one of the important parts about this question is understanding that the financial markets are actually affected by psychology. So no, technically no. The reason why everything price drops in the heat of the pandemic has nothing to do with the underlying aspect of the financial ecosystem whatsoever. It has everything to do with human psychology and the fear that is exacerbated in those moments of heightened fear and panic. So prices are irrationally low when everybody's scared shitless because they're selling things trying to prepare for the unknown future. That's the best time to buy. So no, it is very unlikely that you can separate Bitcoin from the traditional markets because in fact, all of the markets are related to humans' psychological basis of fear and or greed. That's why we use these as a primary indicator to what the markets are doing overall. Yes, so hopefully that makes sense. A5 Max says, please create a lifestyle advice or guide channel. Let's know it soon. Yeah, maybe I'll start doing more videos that are about like meditation and yoga and stuff and just my daily life. Like for instance, right now, you guys might find this entertaining. We're opening up new corporations in Dubai and I have to print off like 13 different versions of these memorandum articles, data sheets. I got to sign that I don't do business with any countries that are not allowed on the FACTA list. And then you have to get everything notarized and signed and shipped off. And we do a lot of stuff in the background that some of you guys might find entertaining. And I'm just never quite sure how to mix and mingle. So I will practice that stuff more often. I do have a lot of fun making the vlogs. And I am living my life anyways. So if it's just pressing record and clicking upload, we'll see how that goes. Miguel says, hello, do you think the Cardano smart contracts will rally up the price despite how Bitcoin and the overall market will perform? The market moves in lockstep. There has not been a case in point where the markets have disjointed from one another. You do see that they will go the opposite ways, like the VIX and the S&P 500 will very clearly go the opposite ways, but they were designed to do that. But when they move, they all move. And again, this is the basis of understanding that human psychology drives speculation, because fundamentally, what's the value of something? Like what's the value of anything in particular is a great question to ask oneself. What's the value of something? And then you get down to, well, what's the price? Is the price even coherently related to the actual value? Well, you don't pay for air that you breathe every day. So very clearly, no. That answer is no. Price and value are not intrinsically linked to one another. There's no thing there. Effectively. So what's important to take into account is that if there is no real correlation between price and value, when people get scared, those things become very, very irrationally placed, because now you might be able to buy some fancy collector's sports car for way cheaper in the height of the pandemic versus in the height of euphoria. You might be able to buy the yacht that you want way cheaper at the beginning of the pandemic than where we are today. Collectors, guitars, art, assets, everything down every single line of a value to price function that we think exists in the heat of fear all goes down because everybody's trying to sell, or most people, or a lot more people are then trying to sell. So you cannot remove the psychology of the human population from the assets themselves. The only reason assets have any valuation is because the humans are basically hallucinating that there's a price to these things at all. So I don't think that it's easy to remove those things. And in fact, I don't think you can. So with Cardano outperforming, it's unlikely. It will move with the rest of the market, just as we've seen in the past. Roland Rodriguez, so music, any instruments, Tio? I do actually have a guitar here with me. So maybe we'll leave out with that one, because I always love sharing these stories with you guys. Oh, she's super out of tune now. That's what you get from a new guitar. Okay, a few more thoughts here. We want to know the nitty-gritty of the day-to-day. Yeah, often paperwork and stuff nobody likes doing. Chilling with the Arcane Bear side vlogs. Love the bunker. Mike, good to see you. I love that. Thanks for joining us again today. It says, I'm loving the bomb shelter place. I know, me too. It's a lot of fun here. Tio, what did you do before crypto? Oh, this is a fun question. Actually, the majority of my studies before crypto were all psychedelics and music. So I spent the majority of my younger years practicing with like ayahuasca shamans in the Amazon and playing music. But when I started my entrepreneurial life around the age of 26, I was focused on search engine optimization and pay-per-click advertising. So my old business partner, who's quite well known in the search engine optimization field, makes around $10 million a year, probably quite a bit more than that. Playing with search engine optimization, that's what we were doing. We were able to make $60,000 to $150,000 a month from websites that we were building, and it was a lot of fun. So that's what I did before, and that's kind of what started me down the path of, well, enjoying entrepreneurialism, learning that it was a process of providing value to other people, and then starting Arcane Bear, because here's the things that I find valuable, here's the things I like doing, and now I get to share that with you guys. So that's kind of what happened in that process. Love that you guys dig the bomb shelter. Great to see you guys again. We'll leave it off with a little bit of music. Thank you all for those of you that do listen, that do enjoy the long-term understanding of a thesis, which is actually pretty simple. Oh, and who like the awesome gains of things like Fever. If you're in our private group, Fever is up 146% again from our last entry, up over 13x in total since our primary entry, so stoked about that. And yeah, it's the same song I've been working on for a little bit, but I figure you'll enjoy it. Thanks for all joining us. Steel with the Arcane Bear. You guys are fantastic. Enjoy your Tuesday morning. We've got some new content coming up for you, some great podcasts. Also, more deep dives into our venture capital research. So over the next few months, it'll probably be less focused on what Bitcoin's price is doing on a day-to-day and more focused on the research we're doing into early stage venture capital, because that is our favorite thing to do. Remember to be patient with anything that you're learning how to do. If you want to know how difficult it is to become a good investor, just try to learn how to play an instrument in less than a week or a month or 3 or maybe a year, and you'll very quickly find that it is time that is your greatest friend and ally, because patience allows you the road to mastery. Steel with the Arcane Bear, thank you all for joining us. We'll see you guys again on the next episode. Listen to the flyovers we are getting today. It's like, yes. See you guys again. Bam.